Hey, good afternoon, everyone. Welcome to another episode with the Live Econ Guy. In this video, guys, I want to talk about the Federal Reserve and their lender of last resort function, how Project 2025 might change that, and some of the pros and cons that I think their approach has. So let's jump right into the content. So, again, this is based on this book, Mandate for Leadership, The Conservative Promise. Again, the author of the Federal Reserve section is Paul Winfree. We'll talk about him in a second. Too Big to Fail, for those that don't know, is essentially the lender of last resort function. So, in previous recessions and crises where banks failed, they were insolvent, the Fed steps in and kind of helps them out. So, this function was implemented with the Federal Reserve Act of 1913, and it was also updated to expand the scope of the whole too big to fail thing in the Dodd-Frank Act in 2010. So I mentioned Paul Winfree in my last video, so if you're interested in this slide, you can just pause and read about him. The proposal in the Project 2025 kind of ideas is to quote unquote limit the Federal Reserve's lender of last resort function. So this Paul Winfree argues that banks currently take risks that they otherwise wouldn't because they know that if something happens, they melt down, that the Federal Reserve will come and rescue them. And he argues that limiting the function, the too big to fail function, will protect taxpayers from bailouts because when banks fail, the taxpayers ultimately take the brunt of the burden in funding them. He also argues that this reform obviously should be given plenty of lead time because this isn't something you should do overnight. It can lead to various financial risks and crises. So now I want to talk about some pros and cons to this approach that Project 2025 is proposing. And if I miss anything, do feel free to comment and let me know what you think. So the three main pros are, I think, the approach will encourage more market discipline, more private sector solutions, and limited fiscal risk to taxpayers. So let's discuss market discipline real quick. So when institutions know that there's not a big brother that will rescue them if something goes bad, they'll be more risk aware and prudent in their approach. So they'll limit their risk-taking behavior essentially. And this can also encourage banks to start working on more private sector solutions, so working together instead of depending on the Federal Reserve in case something happens, like a bank run. So Bank A could go to Bank B and say, hey, if something happens, let's have each other's back. So something like that. And just like they mentioned in Project 2025, less risk to taxpayers if a bank meltdown does happen. Some cons, I think there obviously are some, is that this could increase financial instability, and because of an increased financial instability, that could lead to a broader systematic risk, and that could essentially lower the confidence in the financial system in the United States. So that could be one thing. I think short term, that's for sure going to happen if this does get implemented, even over the longer term. There's also probably going to be a more disproportionate impact on smaller banks because larger banks, they have more diversified portfolios, more asset classes, so they can probably deal with like bank runs and things like that more effectively than smaller banks. So those are the two things that I think are primarily the cons. Overall, I think it's I'm not a big fan of the whole too big to fail kind of idea. I think if an institution takes too much risk and fails, those people that invest in that institution or that bank with that institution, they should have done their research and kind of learned that, hey, this is not a very stable institution. Maybe I should bank with someone else or something of that nature. But either way, there's also always the FDIC insurance, so it's up to $250,000 of checking and savings and other kind of depository accounts are guaranteed by the FDIC, but that's a whole different topic. Overall, I think this proposal, it's not a bad idea, but I'm wondering what you guys think about this so far for Project 2025. Yeah, thanks for tuning in.